Now, looking at Nigeria's petroleum sector, Oyekunle Omotayo-Benson is with ARM Investment Managers, and he joins us to talk about the oil sector in particular. And Oando is one of the important oil companies in Nigeria, indeed in Africa. There's always a lot of interest in it, and particularly with more exploration going on now in Africa. Their results due out on Monday. So what have you got to expect there from that, Oyekunle?
Yeah, indeed, Oando's results will be coming out today. That's just 2 days before the close of the rights issue. Our expectation just stems from what has happened over the past 9 months. If you look at the 9 months, the main revenue driving segment, which is the downstream segment of the business, has seen lower volumes. And this is on the back of the fuel subsidy issues which we've seen so far. So most of them have actually, most oil marketers, including Oando, have cut down on imports of petroleum products. And we expect this trend to actually continue into Q4. So consequently, we are looking at Q4 revenues at about 683 billion naira, which is about 16% over 2011 figures. But really, this is not driven by volumes, it's driven by prices, as I said earlier. For the Q4 in itself, on a year-on-year basis, we expect just a marginal rise, just about 1%. That's expecting it to come in at 195 billion. Previously, it was, I think, about 194 billion. So it just stems to tell you our expectation, which shows that volumes really actually did decline. And remember, in 9 months, a conference call, the management talked about lower import volumes, and they mentioned that they were operating at 50% of their capacity. They expect to increase imports by November if they receive some certain payments, and I expect that will probably come into effect probably maybe Q1.
Right, and there's a rights issue going on as well. Now, normally when a company does a rights issue, you can tell what the investors think about their prospects as to how enthusiastically that rights issue is taken up. How's that gone?
The rights issue, I would want to believe that the rights issue is going on fine, as planned. Bear in mind that the extension, the 2 weeks extension, was due to an industrial action by the NIPOST, that's the Nigerian Postal Service. So that's why I believe that the rights issue is going on fine. We will know at the end of the close in 2 days' time.
Let's look at the regulation in the sector. It's obviously a very important commodity to the Nigerian economy, and the players have been calling for deregulation of petrol prices, currently subsidized by the government. With the oil price moving up towards 120, this morning it was around 116, 117, what's going to happen with that subsidy?
Really, as the oil prices have gone higher, you would expect the rhetoric on deregulation to resurface again. And well, whether or not they would actually remove fuel subsidy is something I actually doubt. If you look at in 2011, what actually happened was oil prices averaged about $106 a barrel. And this increased price on subsidy to 80 naira. That was 73% higher than 2010 figures. So clearly that might happen this year, but currently the average price for crude oil this year is about $112 a barrel. If it pushes higher to like 117, if it averages that, which is what we saw in 2012 March, we were paying subsidy payments came in at around 72 naira a barrel, 72 naira a liter. So there are expectations that there will be more talks about it if all prices continue in this trajectory. However, the president himself has actually come out to state that he would not be taking out subsidy this year. So what we would expect is probably more of a supplementary budget like we saw towards the end of last year, and which would just mean that there will be much more withdrawals from our excess crude oil accounts.
Well, looking in that context and looking at the petroleum companies generally, said to be underperforming the market over the past year, where is the value to be had? Is there value to be had, and can we look for them to catch up with the market?
Currently, the petroleum marketing, quite rightly, last year was a bad year. It really declined. It moved it didn't move in line with market trends. Though in 2010 and 11, it actually moved with markets, though it underperformed. But this year so far, we've seen it move about, the sector move about gain about 20%. So clearly, with the whole subsidy issue over, we expect that this trend should continue, though the fixed margins on PMS, which is the main volume driver in the segment, still remains a bit of a concern. But nevertheless, we expect that in this new year, that clearly the companies would move, the share prices will move in line with markets. We'll know that as at 2011, the number of importers we had were 128. This has reduced as like this Q1 to 32. So the process is more, and I think the PPPRA is getting, the new verification process is gaining traction. So we expect that prices would track movement in the movement of the broader index.